Steve Dudash joins us now to talk more about the banks tonight. He is the president of IHT Wealth Management. Thanks for joining us, Steve. Always good to see you.
Good to see you too, Bill.
What's your version? Why do you think the stocks sold off as much as they did today, the bank stocks I'm talking about?
The bank stocks sold off because we all knew that this quarter was going to be the big quarter. Ever since the tax bill was floated out there last summer, we were all leading up to this point, and that's why you saw the bank stocks have a run-up in the last 12 months. But it wasn't about what they did in the past. It's about what they thought they were going to do moving forward. We needed them to crush, which they did, but we need them to continue to crush, to continue to grow at the rates that they've been doing, 30% a year over year. You can't have that over and over again. So we need to see more strength. We are in a Goldilocks period right now for banks, so it's not unrealistic to think that, but you got to be particular about it, and you were just touching on it. Certain bank stocks like Wells Fargo have a whole problem going on that you kind of have to avoid.
Yeah, you would not touch Wells Fargo right now, right?
No, and listen, they'll get through this eventually. It's a good company long term, but they're kind of going through what Facebook's going through right now, and that is the regulatory eyes are all over them. They can't get aggressive with sales tactics on the inside of the bank, at least not for the next couple of years. So there's no way they're going to be able to keep pace with the JPs and the Bank of Americas of the world right now. We were on your show like 3 years ago talking about how good they were at the retail side, which they were great at. The problem is they were too good at it, and they were doing things that weren't, up and up. And because of that, now that's why you're seeing the pullback. So it's a value trap. You can't go after it just because it looks cheap. There's a reason why it's cheap.
Now we get more reports next week. Do you expect them to do as well as J.P. Morgan and Citibank did today?
Bank of America, you're probably going to see the exact same thing on Monday. You're going to probably see the stock pull back a little bit because it's going to say, we beat earnings, we did great, but everyone's going to be like, we knew that. What are you doing moving forward? I tell you this though, it's a wonderful sector to be in. You pick a few of the stocks in there, you buy in on this little dip that's going on right now. The next year or two, they're going to be raking in money. I mean, you're going to see some huge profits out of that sector because of what you guys were just touching on. So if you're looking for a sector to get into, it's hard to argue with that area right now.
But so this is all dependent, or at least in part dependent on the Fed continuing to raise rates, right?
But they're going to. We all know they're going to. There's at least 3 more rate hikes going. The real question is, do they continue this next year? But the reality is, even if they don't do any more dramatic 3-in-a-year type hikes next year, with the tax regulation where it is right now that benefits a company like a bank that much, and with the rate hikes, your savings account rates aren't going up, but those loan rates are definitely going up. That spread is there. Take advantage of it. The reason why we haven't seen huge profits were, yes, some of the trading volume on it, the investment banking was down, but with all the extra flow that's going out there right now, investment banking is going to pick up. That's, you know how it is. It's choppy in that area. So take advantage of this little dip, buy in at some nice prices for the right stocks, and then move forward. I like them.
We will do that now, as a matter of fact. Steve, always good to see you. Thank you. Steve Dudash with IHT Wealth Management joining us tonight.